Talk radio station.
Where we have another set of numbers this morning. ValueStrat have put together their Q2 numbers for Abu Dhabi. They're going to be released a little bit later today, but we are having a sneak peek this morning, and in the studio to go with us, is Sean Swinburne. He's the Associate Director of Commercial Valuation at ValueStrat. Sean, good morning.
Morning, Brandy. Thank you for having me on the show.
And once again, it's the rents that are stealing the thunder, if you like, of this report. But unlike your Dubai report, it's because we have a nice, steady, calm set of numbers here. Talk me through them.
Yeah, so there is quite a difference in the growth levels. With Abu Dhabi, we've continued to see a steady, healthy growth. And the reason for that we would likely cite as perhaps being a little bit slower coming out of the COVID restrictions and that just filtering through. But we do still, as I say, the headline here is that we're seeing continued healthy growth in the Abu Dhabi market, and that's really positive for us to see. So
give me the rental numbers. I'm not going to steal your thunder there. It's your release.
Yeah, so our VPI has shown a 2% increase quarter on quarter, 6% year on year. So we're continuing to see that benefit there, and a lot of positive sentiment across the Abu Dhabi market, and that's filtering through into rents.
The interesting thing about these rental numbers for me, though, is the fact that apartment rents, the rate of rise is almost twice that, or pretty much twice that, of the rate of rise of villas. And that's new, isn't it?
Yeah, that's a very good point, and something that we have identified. Like you say, it sort of bucks the trend of what we'd observed up until this point. What we'd seen in Dubai, we were then seeing in Abu Dhabi as well, in terms of that flight towards the larger homes, luxury villas, and apartments slightly lagging behind that. So it'll be a really interesting space to watch. Does this signal a different trend in the market, in a shift in demand? It's something we'll have to observe as we go forward.
What's your theory? Why do you think it's happening?
It could be to do with affordability, and that the demand has shifted towards more affordable homes. It could be just a little bit of a blip in the market, and we might see that we go back to demand shifting to villas again in the following quarter. So that's why I think before we take any definite conclusions from that, it's just something to observe and monitor, but certainly interesting to see.
One of the other things I picked out of this numbers-wise was the amount of stuff that was formerly off-plan, and I suppose it's not off-plan once it gets handed over. It becomes very much on-plan. 300-odd units, slightly less coming online in the first half of this year. Yeah. But that means that there's nearly 6,000 more scheduled to come in the second half.
And that's a huge amount, and I think that what we're seeing there is a bit of a wash of delayed pipeline coming through, and expected for completion in 2023. We'll only really be able to take a full snapshot and get the full picture when we're looking back from our 2024 position to see exactly what has come online. But I think it's also important to have a little bit of context. It's very usual for us to see the difference between the supply that comes online and what was expected to be roughly about half